Hello everyone, I am Dr. Pooja Sharma, working as an Associate Professor in Department of MBA. Today I will discuss a very important concept, that is company. As you know, there are three forms of the business. First is sole proprietorship, second is partnership firm, and third is company. All the rules, all the accounting concepts, all the accounting assumptions, standards are made for the companies only. Company means a legal entity formed by a group of individuals to engage in and operate a business enterprise in a commercial or industrial capacity. Earlier, the Company Act was 1956. Now it is replaced with the Companies Act 2013. So there are some important amendments made in this act in 2013. One person company, a sole proprietorship, or the single person company, single person business unit can be a business company, can be a company. That is also known as the one person company. There will be an individual person. So now we can just say that an individual person, as we have seen, a group of individuals can prepare the company, but now a single person also can prepare the company. That is known as the one person company, means OPC, and that amendment was made in 2013 act. This was the important feature of the 2013 act. Now we will discuss about the essential features of a company. It is an incorporated association, means a company is created when it is registered. It can work only, it can start the work only when it get the registered under the Companies Act 2013, and it can start the business when it gets the certificate of incorporation. Second is artificial legal person. A company works as an artificial person. Company is a legal person like a natural person. It has the right to acquire, dispose of the property, to enter in a contract with a third party by its own name. Company can sue and can be sued on its own name. It has the separate legal entity. It is one of the important accounting assumption. What it says, that the separate legal entity, a company should have the separate legal entity with their shareholders, with their owners, means all the assets and all the properties, all the liabilities are not same for the owner and for the company. Companies having, whenever they are exchanging anything, they are dealing with, they are having any kind of transaction, company and its owners, means shareholders, they are treated as the owners are treated whenever they are taking anything from the company, whenever they are giving anything to the company, they are treated as the third party. Like for the interest, for the, if they are taking any cash or asset from the company, they have to return to the company apart from the profit. I am not talking about the profit. Whatever the amount they have invested in the business, they have the right to get the profit only. Apart from that, they cannot take anything from the business, because they have the separate legal entity. Their personal expenses cannot be part of the business expense. Perpetual existence means whenever the company starts the business, the main assumption behind any business is that the business will run for the long term only. Any person will come or in retire from the organization, it will come or go from the organization. There is no effect on the working of the organization. Company will run for the long term only. Common seal, as a company works as an artificial work like an artificial person. So a company has the right, or it cannot sign over the document. Artificial person cannot sign over the documents. So what the company can do, company can use, on the place of the sign, company can use this common seal. That seal indicates the company has given the authority to the some person. Company has involved in a particular contract with the other person, but that seal, but having a legal personality, means companies having a common seal should be signed, or should be authorized, given to the authorized person only. Limited liability, a company may be company limited by shares or the company limited by guarantee. Suppose face value of share is 10 rupees and a member has paid, or the owner shareholder has paid 7 rupees. So the remaining 3 rupees, he'll be responsible for the remaining 3 rupees only. Transferable shares in a public company, the shares are freely transferable. The rights to transfer the share is a statutory right. It cannot be taken away by any of the provision in this article. Now you can just see the difference between the company and the partnership firm. Mode of creation, it is mandatory for the company to get the registered, but for the partnership firm partnership can be done by the agreement. Legal status, legal entity distinct from its members, as it has the separate entity from its members, but the firm and partners are not separate. Liability, company limited by the limited liability of the members, but in partnership there is unlimited liability. Transfer of share in public company, freely shares are transferable, but in a partnership firm, ordinarily no right of transfer of shares. Number of members in a private company, minimum 2 numbers, maximum 50. Now it has changed as per the Company Act 2013. Now it is 200. And for the public limited company, minimum numbers are 7 and maximum unlimited as per the share capital. But in partnership firm, there will be 2 minimum members and maximum 20. Legal formalities, there are so many legal formalities for the company, like memorandum of association company has to prepare some documents, audits, publications, registration fee, filing, the tax, and lots of legal formalities are with the company. But with the partnership firm, no legal formalities, registration not compulsory, no audits, no publication of accounts, no disclosure concept applicable on that. So there are less number of formalities, legal formalities with the partnership firm. So here we have seen the company, concept of the company. Earlier the concept, what it says, that the group of the people can start the business. Now the one person can also start the business as per the Company Act 2013. We have seen the essential features of the company. Now the difference of the company and partnership. So in next video we will talk about some important aspects of the company. Thank you so much.